And next up is Zimmer Biomet, which is a company also very similar, I would say, to Stryker, because it's in the manufacturing of orthopaedic reconstructive products, sports medicine, all of that sort of stuff, trauma products. Market capitalization a little bit smaller though, about half, $24 billion, price earnings ratio 48.21, dividend yield 0.82. The merger with Biomet made them bigger. Let's go share price chart. So not quite as frothy.
No.
It did have a little bit of a tumble there in 2016 after some third quarter results, which were marginally disappointing.
Yeah, and you know, other bad news that's not going to be influencing their 2017 sort of outlook is the fact that they've agreed to a fine. They've come to an arrangement with the DOJ and the SEC in the US.
And what was that in relation to? It's a fairly small fine.
It's about $30.5 million.
Okay,
so
that sounds like petty cash.
Yeah,
you know?
It's not that big.
But what was it for? Was it related to marketing of some product that was inappropriate or something? Because these devices all still need to be approved by the FDA.
That's the thing. So you can't really start marketing anything before it's been approved.
And occasionally, I mean, we've been singing a very positive bent here, but occasionally they do have recalls. I mean, we haven't talked about Johnson & Johnson today. Stryker's had a few recalls. So imagine the bad news: you've had a knee and joint replacement, and then you get a call from the specialist to say, you got to come in because we've got to make a fix to that thing.
Or we need to replace it.
I would say a large proportion of people say, you know what, I'm not coming back.
I'm just going to live with this defect, No, so it's, I mean, if it was combustion issues, then it could have probably had issues. But I think in this case, you know, it's sort of very inconvenient for people when that happens.
Okay, as far as Zimmer though is concerned, I mean, the company has an interesting history. They came out of Bristol Myers in 2001. They were spun off and put out onto the market. Biomet was quite a big acquisition. It was sort of a merger of equals. Biomet itself had you know, some history as part of Merck and had relationships with Merck. But the themes remain the same. I mean, I don't really know what to say about this one other than what we've said already. It's the same stuff about obesity, earlier replacements, all of the other stuff.
And they're quite well known for the aluminium stints.
Yes, exactly. I think that's where the company, the original Zimmer, came from, was aluminium splints for people in the 1914s. And then they developed the frame, you know, which people have seen around. Nowadays they have little wheels on the bottom, so you don't have to make it easier. Okay, share price chart we've looked at already. The current earnings volatility may be in part related to the merger, but for me it looks like a hot stock anyway.
I think it's in the right industry, and you know, the fact that it probably hasn't outperformed the market is a good idea to have a deeper look at it.
Yeah, good. So we'll go hot on that one too.